three in my mind of equity, debt, and commodity. And then it feels like everything else falls into one of those or
Those
a category
umbrellas.
or a combination of them.
Okay. Welcome back.
Hey, welcome.
Episode 13. Previously, we created episodes based on what we wanted to share, which was a lot of personal finance content, right? We want to help people get a hold of their finances, get in a better position, so that they can pursue financial freedom. They can, do the things that they want to do with their money. We're moving a little bit. Some of this will be personal finance still, but we're going to start getting more niche. That's why today we're going to start talking about types of investments.
Okay.
As we've talked about, budgeting, getting out of debt. We've talked the whole time about why the ultimate goal is investing and how that will help you grow your money. But today we're going to kind of drill down a little bit into the types of investments.
Perfect.
You want to take it away?
Yeah, well, I guess my brain works in the context of instrument. As in, there's three in my mind.
Okay.
Of equity, debt, and commodity or asset.
Okay.
And then it feels like everything else falls into one of those or a category or a combination of them.
Okay.
I'm going to describe debt, equity, and assets. And equity is actually having ownership of a company. So you don't own the assets of the company. You might have a claim on them, but you own portions of the company itself.
Okay.
A debt is when you, like a company or a government or someone owes you money that you have lent to them on specific terms. And then, and there's, again, variations on that, and that's where we get things like bonds, CDs, notes, okay? And then the other is commodities or assets, and that is, real estate. It is gold, silver, cryptocurrencies. So you can also get mutual funds and ETFs that are helping you invest in commodities. So,
like the Bitcoin ETF.
Yeah, exactly.
Can you give us an example in the context of real estate of having equity, debt, or the asset?
Right. So in real estate, if you want to hold the asset, it's just directly buying a property.
Okay.
So you could go out, purchase a property, and become the landlord. If you want to invest with equity, you're going to be investing like in a REIT, is one way to look at that, or as a limited partner, where you're investing in this partnership where a general partner comes in and is going to manage the property and you're just passively putting the money in there. So it's similar to direct ownership. You do have, your entity that you invested in does have direct ownership, but you're not alone. Someone else is managing it. You're passive.
Not as much responsibility.
Yeah.
Not as much ownership.
Correct. Now, often the general partner will receive extra compensation in the form of extra ownership for being the manager. And when you think about that, this is kind of probably jumping the gun a little bit, but when you think the term manager, it doesn't mean they're managing the property, it means they're managing the investment.
Gotcha.
The manager will also hire a manager who will manage the property. And then there's a debt instrument, which is just lending to someone similar to hard money lending. And that is, an idea of that is if there's a flipper trying to just take a chunk of money, they're buying a property, they're going to flip it, fix it up, and then sell it. That would be shorter term. Hopefully it is short term, always. And then that's just a debt.
So we've got these three categories of investments.
Yep. And you can put it, I think you can always fit whatever type of investment you're thinking of into one of these categories.
Okay.
Or a combination of them.
Sort of a hybrid situation. We talked about the asset classes. Let's break it down into types of investments.
Okay.
Okay, so the first few on our list might be categorized as more traditional investments, and those are things people might be more familiar with, perhaps. Stocks, bonds,
Yep.
mutual funds, and ETFs. Stocks are equity in a company.
Yep.
That are
You're looking at me like, did I get that right?
right. They're equity in a company, but traded on the public stock market.
Yeah.
Like any Joe Schmo can, if they have enough money, go buy stocks.
Yeah, and when we're talking about retail investors, that has been the traditional method. That they would go out into the public market, a stock exchange, that have an account at some brokerage firm, and then they would buy the stocks. Now there are instances now with crowdfunding available where you can buy stocks not on a public market, which is, they're technically public markets in a sense, because there's a platform there, a website or something, but they're not publicly traded, so you can't, there's no secondary market after the original purchase. So
Got it.
You will have an illiquid investment in a stock because of what's available now through crowdfunding.
Next we have bonds, which are typically government, but can they be corporations as well?
Yeah.
Loans.
They are often tradable, is one of the distinctions.
Okay.
So it's like a stock being traded on a public market. A bond can also be traded in a public market. Whereas a loan, when you use, and it's just the use of the name. There's obviously different characteristics, but when you say loan, you're typically saying, you and me have a loan agreement together. One of us isn't going to be able to easily get rid of that, so you're kind of stuck with the terms and the people that are involved with the loan.
All right, up next we have mutual funds, which are professionally managed funds. You buy into it and you essentially, through fees in the fund, pay someone to manage
A chunk of investments.
a chunk of investments.
They will buy and sell according to the thesis of their fund.
Yeah.
So, for example, if you, the audience member, are at an employer who provides you with the ability to invest, and they, will typically go through a matching, you get to choose, typically, a fund that you're investing in, and it will tell you that one of them is high risk, but it could be high growth. And you should consider it if you have a lot of time in the market before you retire. So that's what I mean. That kind of description is what I mean by the thesis of the fund. And every fund has their own thesis.
Got it. Final category of traditional investments, as we're talking about them, is an ETF, which is like a mutual fund, except you can buy it on the public stock market.
So I've never worked at an employer where I participated in a mutual fund program. I am curious if in their investment program you can put your money, you can direct it to an ETF.
I wonder. I'm interested to know the difference between an index fund and an ETF.
An index fund means that it is indexing a specific market. So if you look at the S&P 500, I believe that is an index fund. So we can verify. If that's correct, what you're saying is they're taking a chunk of, now I'm going by the name, 500 companies, the biggest companies, and they're saying what is the value of those 500 companies, biggest companies. Or you could look at, I think SPDR is the New York Stock Exchange, if I remember correctly, and that is an index fund where it really is just buying portions of every single stock in the New York Stock Exchange.
You can buy an ETF of an index fund.
That is, when you say index fund, it may be an ETF.
Okay.
And its thesis is we're just going to index a specific
500.
category of things. And there is no management. We're not buying and trading. They're just holding
Got it. Okay.
equal portions or whatever of those same assets.
Sweet. Now we're going to get into alternative investments, which, according to our list, include real estate, commodities, and private equity.
Okay. Out of curiosity, why did those pop up on the alternative investment list?
I don't know, because when I think
What was the
alternative, it's
distinction?
crypto.
Sure. Okay. So with real estate as an alternative investment, it's interesting to me because I don't know if I would call it alternative. I think that is looking at investing from the perspective of when you invest, it's a public market thing. And so you think, okay, well, a REIT is a public market thing. You can buy that on the stock market. And so a lot of people, though, own real estate individually, as in they're direct investors. And it could be pooled with a few other people or small groups, but lots and lots of people invest in real estate as a direct investment. So, we'll let it be an alternative investment because it's not stock market traditionally when people are talking about it. But then for you as the audience member, when you are thinking about what kind of investor you want to be, those are the distinctions typically as someone who's buying stock, someone who's buying real estate, and someone who's starting businesses. And again, obviously there's other things involved in there, but for the most part, those are the categories.
Sweet.
A quick summary, we have talked about it in depth at the beginning of the conversation, but in general, if you want to invest in real estate, there's multiple ways to do that. You can do it on the public market, you can do it individually, you can become an active investor where you have to help manage the property, or you can become a passive investor where someone else is managing it. So you're just putting your money with someone else that you trust, hopefully that you trust. You should trust them. Trust them first, then invest. Lending in a sense. So you're still investing in someone else, but it's not investing as an owner, it's investing as a lender, creditor.
Okay, sweet. We have commodities.
So commodities are often, and again, when we're talking with our audience, a retail investor, a lot of the things that come up as investments are only available to them if there is some version of it in the public market.
Yes. Yeah.
And so you're looking at an ETF or a mutual fund that is focused on a commodity. So you can get precious metal of these, mutual funds and ETFs, and any type of commodity, you can get those in.
I have a question. If you invested in a mutual fund in gold, does that mean whoever manages the mutual fund buys physical gold?
No. Well, when you're talking about a mutual fund, at least my belief on this, my understanding is that they're not always just investing in gold. They could be investing in gold miners, for example.
Okay.
And so obviously there's going to be different versions of that, so you have to find one who is a good fund manager and it knows that industry well.
Got it.
So it is much more broad than just the
commodity.
Okay.
Interesting.
Yeah, I have a feeling that an ETF is limited to the commodity itself. We could verify that through research, but mutual fund not. Yeah, so there is a main difference in a REIT than other types of public market investments like a mutual fund, and that is that a REIT has specific tax advantages that the law allows them to have as long as they are doing, I think it's distributing 90% of their revenue each period, quarter could be, or annually, then they're allowed to not have to pay corporate taxes, which saves the whole, obviously the organization,
everybody,
a bunch of money.
Yeah. Okay, that's sweet. Good job, REITs.
Good job, REITs.
Good job, law.
Thank you for helping.
Yeah.
Yeah, well.
Did you enjoy your tax class when you were in law school?
So, one of the biggest things that I realized in tax law is that it is so confusing. So we would have open book exams and people would still do poorly because you would read, the question would ask you, now this is designed for the exam. They would ask you, be sure to ask you a question that has a main rule, but it has exemptions, but they're found elsewhere. Like you cannot just keep reading the rule and say, oh, here's the rule and its exemptions. You have to read the rule and know that there's an exemption 17 rules away somewhere else. And anyway, so it's actually very, very hard.
Private equity? Shall we touch on it? We like private equity.
Definitely. So private equity, I mean, you can look at it from the name and say technically it means something that is private, a private offering of some kind. But in the market, when people are talking about private equity, it's typically a business model. As in, there is an investment group that is a private equity group, and they are purchasing the equity or assets of businesses.
Okay.
And then they're trying to find ways to make money on that purchase. So they could be selling off some of the assets, they could be selling everything individually and closing down the company. They could be selling off.
Merging.
They could be merging, yeah. So that, I think they call that a roll-up. So there's a business model where someone, is a private equity group, and they buy, let's say, 30 HVAC companies throughout the Midwest. Now they are this conglomerate that is worth more because they've put all these assets together.
Yeah.
But they could say, oh, this company has this asset that is not as valuable, and it's not important for us, and we're going to sell that and focus on, some synergies that we have with some of our other investments, with this one. Anyway, they're just trying to find ways to create more value out of this company that they purchased.
Got it. So,
do you want to talk about venture capital kind of in the same way?
Yeah, let's do it.
Because a lot of people don't understand what venture capital is either, but it is very similar to private equity in the sense that it is a group using some kind of private exemption to be able to make investments. With a venture capital group, they're typically investing in companies that have high growth potential, and their thesis is that investing is a numbers game. You don't know what companies are going to succeed. They're investing in startups that have the potential to grow very valuable. And they know that a lot of them are going to fail. The last time I looked at what the stats were, it was something like 5 are going to fail completely. They're going to lose all their money. 3 are going to give them some portion of their money back, but no profit. And then 2 are going to be extremely profitable. And when you just combine all those returns, they end up making money as long as it's a good group. So that's how venture capital works. And so it works better the better the team is at vetting and kind of understanding the market and what is really going to grow. Those things, the private equity and the venture capital, are confined to accredited investors like you and I.
Our venture yeah, that's what I meant.
Yeah. Yeah, I think they typically put their money with someone else who is a venture capital group, because just like a mutual fund, the venture capital groups have specialties typically. And so whatever specialty they have, that's what they're focusing on.
Got it.
A lot of times an individual who has buku money is putting their money with private equity groups, with venture capital groups, with family offices, so they actually have a bunch of money in an office, in an investment group that they've hired people to run for themselves. Yeah.
Well, we've kind of gone through the types of investments. When we're looking at like the traditional versus the alternative, I think maybe now that we're thinking about it, I separated those for like volatility factors.
Yeah, and definitely with the onset of crowdfunding, any of these things are kind of available. Obviously, the whole idea of a bond is that it has a public market afterward as well. And obviously there are certain other things, they're rated often. So there are distinctions, but you get something like almost all of these things in crowdfunding. The one thing that you don't get is an investment group. As in, you cannot, so the issuer in crowdfunding can never be an investment company. And so it can't be someone who is saying, oh, well, we'll just go invest in other companies that meet this model. It's not allowed. It is for real estate, interestingly enough, if you have a business plan. Like, there's some interesting language.
Also available on Reg A, right?
Yeah.
But not Reg CF.
Correct. Yeah, most of that language that I'm talking about is the Reg CF restrictions.
Cool.
And so, you as the audience, when you're looking for any type of investment, you're going to find a lot of it in regulation crowdfunding on the different platforms. And what you have to do is understand the type of investment that you're getting into. What has that looked like in the past? What have the traditional investors been doing to make sure that that was a good deal. You know, so if you find a startup company on a platform for regulation crowdfunding, you're going to want to ask yourself the same types of questions that a VC would ask. And you would want to probably invest like a VC, which is treating it like a numbers game. And so assuming that you're going to be wrong on many of your investments, you have to spread it out over multiple investments. You don't have to, obviously, because I will say this, a lot of people investing in crowdfunding are doing it for a value proposition, as in they want the thing to exist that they're investing in. In that case, obviously, you don't have to just invest for the numbers game, because you're hoping that that thing exists.
But if you're hoping to do the value, you want to make a little money.
You want to make the money. I mean, for sure, that's why you're here, probably.
Yeah.
And then if you're, whatever you're doing, so I gave one example, a startup company, but if you're looking at real estate, you don't just go out and pick and say, hey, this is on a platform, so I should buy it. You should be looking at what the investors in real estate deals have been asking, and then get those answers. And so if very often a platform is not going to tell you what those numbers are, as in, you know, with real estate. No, I'm not going to say no platforms, but many platforms do not have the ratios that you're going to want to ask about already on the page. And so once you figure out what they are, you should be asking them in the public Q&A. And if, you know, maybe someone else has already, but if not, you should be doing it. Get the answer from the issuer team, and then once they answer that, then you have more information to be able to say, is it a real good deal? Or sorry, is it a good deal? Do I think it's a good deal? Not a really good deal. I don't mean it that way.
A real for real life.
Yeah, exactly.
Yeah.
Not just fraud. So
Okay. Yeah, no fraud.
we don't like that.
If back to our asset classes, equity, debt, commodity, all three are available through crowdfunding.
Yeah. You know, typically when it's commodity related, they talk about it in terms of portions of shares. When you're investing in some kind of commodity, that is often termed fractional ownership.
Got it.
Because you can't own the thing or even a unit of the thing, because only one exists. Now, I guess I should say that's not for all commodities. That is for like artwork or cool things. You know, I've seen people buying shoes.
Now, let me ask this: when there are crowdfunding offerings for startups that are going to offer a product, what kind of investment is that?
Well, it depends, because I mean, you could argue that it is a startup, but I would more likely argue that it is just a small business. If you look at a lot of the product deals, they don't end up going to equity crowdfunding or investment crowdfunding. They're often going to just like a pre-buy
Pre-sale situation? Okay.
Where they want you to buy their thing, and then they're going to sell it and make it, and they'll make some money, and maybe that will turn into a business.
Is that still under regulation crowdfunding, the rules?
It can be. The pre-buy is not.
Okay.
But if they later grow, they could always, turn around and do that as well.
Okay.
But I would still say that is more like a small business.
Okay, cool.
Yeah, I'm not sure what startups have had products that are not like technology. I guess, you could say that biotech, those are definitely products, but you're not selling to individuals. Typically, you're looking for a big buyer.
Okay.
We've talked today about different investment types that are traditional in the market, whether they're alternative or not. That's irrelevant in my thought here. But we did mention that a lot of these are being opened up for individual investors. And what prevented individual investors in the past was the regulatory framework. As in, you could not invest in a venture capital company because the exemption that group relied on required you to be an accredited investor. So a lot of these things are becoming available because the regulation has been eased a new regulation has been created that allowed investment from non-accredited investors, even when there's an advertisement happening. And so you now, audience, if you've heard of other types of investments that you have wanted to get into, and if you've ever heard people say, oh, this is saved for the elite or whatever, you are likely now going to be able to get into that because of the regulation crowdfunding exemptions. The content in this video is for informational purposes only and does not constitute financial, investment, or legal advice. Investing in securities involves risk, including the potential loss of your entire investment. Always conduct your own research and consult with a licensed financial advisor or legal professional before making any investment decisions. The opinions expressed in this video are those of the speaker and do not necessarily reflect the views of Ridge, Angel Funding, or VAS Portal.